Imagine a commanding stage presence, deepened voice rising into a crescendo. Ladies and gentlemen, I want you to open your eyes, open your mind. Because what we are witnessing is not the end of silver's story. It's the very beginning of its breakout. The momentum has flipped. The resistance that held at $35 per ounce, dead. The bars are shattered. Silver is running. It begins quietly, almost unnoticeably, like the slow turn of the tide before the wave crashes. Most people don't hear it. Most people don't feel it, but those who are awake, those with their ears tuned not to noise, but to signal, they sense the shift. You see, silver doesn't announce itself with fanfare. It doesn't walk into the room with a trumpet and red carpet. It moves in silence, and when it moves, really moves, it doesn't ask for your permission. It doesn't wait for your consensus. It simply breaks out. The breakout we're witnessing now is not a matter of if. It is not something to hope for. It's not an opinion. It's a fact backed by price action, by momentum, by structural setup. The chart is telling the story. The resistance that sat like a fortress around $30, then $35, has been broken. Not tapped, not tested, broken, and with it, the doors to a new era for silver have been kicked open. But here's the truth: most of the world is still asleep, still distracted by artificial headlines, still chasing tech mirages and meme coins. But real value is quiet, enduring, rooted, and silver is now awakening from a decade-long slumber, ready to reclaim its throne as not only a monetary asset, but a necessity of the new industrial age. You want proof? Let's talk about the forces pushing it. The technical breakout isn't random. It's the result of years of compression, of frustration, of energy building up behind a dam of disbelief. That's what the charts don't show: the human emotion behind the candles, the psychology of a market that has been pushed down, disregarded, disrespected. But here's the thing about pressure: it always finds a release. Now the release is here. The moving averages are aligning. Momentum has flipped to the upside. Breakouts are confirmed on weekly and monthly time frames. This isn't noise, this is structure. And when structure aligns with conviction, with sentiment, with reality, you get explosion. But you know what really makes this different? The fundamentals are matching the technicals. The world needs silver, not in theory, not in the future, now. Solar panels, EV batteries, conductors, medical tech, AI infrastructure. Every one of these is silver, hungry. Every one of these is a pillar of the next economy. That's the macro case. And the supply side, starved. Mined output is declining. New projects are drying up. Investment in exploration is behind. The gap between demand and supply is widening, and it's doing so at the same time the technicals say, run. And yet, most people still think this is temporary. They look at silver as though it's some second-tier metal, a sidekick to gold. But that thinking is ancient. That thinking is for people who follow the crowd, not for those who lead with insight. What's happening now isn't some random rally, it's a repricing of reality, a recalibration of how the market views silver. And while some will try to trade it, flip it, scalp it, the wise are positioning with conviction, because they understand something simple. This breakout isn't the destination, it's the departure point. There is a generation of investors who have never seen silver move, never seen what it looks like when the metal decides it's done waiting. But those of us who study patterns, who read the fingerprints left behind by the market, we know what comes next. Acceleration. Silver doesn't creep. It explodes, it runs fast, it shakes off the doubters and climbs the wall of disbelief. That's the phase we're entering now, not consolidation, not accumulation, momentum. And this is what separates winners from spectators. The winners recognize when a breakout is not a rally, it's a revolution. And they act, not emotionally, not impulsively, but with clarity, with strategy, with preparation, because you never wait for the fire to be obvious. You act when you smell the smoke, and right now, silver isn't smoking, it's already burning. There comes a point when silence becomes deafening. When numbers, though silent, begin to scream, that point is now. And what's screaming? The gold-silver ratio. For years, this ratio has whispered clues to those paying attention. It's not new, it's not complicated. But it's brutally honest. It doesn't lie. It doesn't care about news cycles, central bank chatter, or public opinion. It reflects reality. And right now, that reality is this: silver is undervalued. Let's put the numbers on the table. Historically, the ratio between gold and silver has hovered around 40:1, sometimes 60:1 during dislocations, but today we're floating near 90, even peaking above 100 at times. 100 ounces of silver to buy 1 ounce of gold. That's not a normal valuation, that's a market screaming imbalance, but most people don't hear it. They're not trained to listen. They're looking at gold hitting highs and think the opportunity lies there. They're wrong. The opportunity, the asymmetric reward, the sleeping giant, that's silver. Because gold has run, but silver hasn't yet followed. And that delay, that lag, it's not a sign of weakness. It's a slingshot being pulled back, not a failure to fly. The question isn't whether silver is undervalued. That's been answered. The question is, how long will it remain this way before the reversion happens? Because markets always revert. Always. Imbalances don't last forever. They stretch, they test, and then they snap back, violently, relentlessly. And when they do, those who are watching quietly, patiently, they're the ones who collect the rewards, while the rest scramble to understand what just happened. This isn't about silver playing catch-up. It's about equilibrium, about restoring balance in a system that's tilted too far for too long. Silver isn't some poor cousin to gold. It's not gold's little brother. It's a monetary metal, a store of value. A hedge against fiat erosion. And increasingly, it's the fuel of the future used in solar tech, batteries, and electronic infrastructure. So when you look at the gold-silver ratio, you're not just looking at metal prices. You're looking at opportunity mispriced. You're looking at an arbitrage the world hasn't yet awakened to. And you're looking at timing, because once silver begins to move, it doesn't walk. It runs. You see, the mistake people make is they think the ratio just reflects price. But it reflects sentiment. It reflects neglect. It reflects decades of ignorance towards silver's real role. And when something has been ignored for long enough, the snapback isn't just strong, it's brutal. Think about this. When the ratio last touched these extremes during crises, during peak uncertainty, silver didn't just rebound, it exploded. It didn't play it safe. It didn't rise politely. It reasserted itself with violence. And those who had the foresight to position themselves didn't just profit. They made legacy wealth. But what does it take to see it before it happens? Discipline, patience, and clarity. Because the world will always tell you to go where the noise is. But the real plays happen in the quiet, where the math speaks louder than opinion, where history becomes a guide, not a ghost. Right now, that history is pointing to silver, loudly. The ratio tells a story of distortion. But distortion doesn't last forever, and when the pendulum swings back, and it will, you won't get a warning. Silver doesn't wait. It doesn't beg for attention, it claims it. So the ratio isn't just a statistic. It's a signal, a siren for those who have studied cycles, a call to action for those who understand that when value is mispriced this severely, the correction doesn't come slow. It comes like a dam breaking. Ignore the ratio and you miss the moment. Understand it and you're already ahead of 90% of the market. Because while the rest chase what's shining, the smart ones buy what's about to, and right now that's silver. The ratio is screaming. The question is, are you listening? Every market has a moment, a point when theory meets reality, when speculation is replaced by necessity. And when it comes to silver, that moment isn't coming, it's already here. And it's not being driven by hype, not by headlines, not by hedge funds pumping narratives. It's being driven by something far more powerful, demand, not soft, speculative demand, not the type you read about in economic think pieces. No, this is industrial, tangible, measurable, relentless. It is the kind of demand that builds cities, powers industries, and changes the very infrastructure of the global economy. Silver is no longer just a precious metal. It's a strategic asset, essential, critical, non-negotiable. We're not talking about jewelry stores or central bank vaults. We're talking about semiconductors, solar panels, electric vehicles, medical equipment. AI servers, grid, scale battery storage. You want a greener world, you need silver. You want a smarter world, you need silver. You want a more connected world, you cannot do it without silver. That's the truth. And it's the kind of truth that doesn't need to be dressed up in fancy charts. Just follow the supply chains, follow the manufacturers, follow the technologies that are reshaping human civilization, and you'll find one thing in common: silver embedded at the heart of all of them. The global push for clean energy is not a marketing campaign. It's a planetary pivot. Countries are legislating emissions targets. Companies are under pressure to go green. Entire sectors are shifting their engineering and materials sourcing to meet ESG standards. And at the foundation of that transformation sits silver. A single electric vehicle uses up to 3 times more silver than a traditional combustion engine car. Multiply that by the millions being sold every year and the millions more coming. Every solar panel laced with silver, every 5G antenna, every data center, every smart appliance, they all need this metal. Not want, need. And here's where it gets critical: supply can't keep up. The silver being mined today doesn't match the future being built tomorrow. And the reserves in the ground are getting harder, deeper, more expensive to extract. There is no silver glut. There is a silver scarcity disguised behind short-term price movements and paper markets. While the price flutters, the physical demand is digging in, growing, month after month, year after year. The squeeze is building not on your screen, but in the warehouses, the procurement departments, the smelters, and the industrial suppliers who are watching inventories thin out and delivery times stretch. You see, most people get caught watching the wrong game. They chase charts. They read sentiment reports, but they miss what matters: flow. Because money follows flow, and flow follows utility. And silver's utility has never been higher than it is right now. So what happens when an asset has increasing utility, increasing demand, constrained supply, and is still priced like it's stuck in the past? You get ignition, and that ignition doesn't come with warning signs. It comes like a spark in dry grass. One moment, everything looks stable. The next, it's wildfire. You can't stop it. You can't outrun it. You either got in early, or you're standing in the smoke. The industrial case for silver isn't academic. It's economic. It's embedded in our future, and it means that every dip in price isn't a warning, it's a gift. Every pullback is an opportunity. Every pause is just a deep breath before the sprint. The people who understood gold did so because they understood fear. Inflation, monetary risk, but the people who understand silver now, they understand function, technology, evolution, and they know what happens when a metal becomes more than just money, it becomes a machine. So while others wait for signals, the signal is already here. It's in the gigafactories, in the solar fields, in the charging networks being built on every continent. The future is industrial. The future is electric. The future is connected, and at the center of that future sits silver. There's a difference between knowing the value of something and understanding its moment. Gold doesn't move like the others. It doesn't jump when headlines flash. It doesn't bend to the noise of politics or the distraction of trends. It waits quietly, patiently, like a predator in tall grass, and while the world scrolls, tweets, and speculates, gold prepares. Right now, it's not shining in the spotlight. It's not grabbing front pages or trending on feeds. That's by design, because when gold moves, it doesn't walk, it erupts. And the smart money, they're already circling. Positioning, accumulating, not for today, but for the storm they know is coming. The signals are there, clear, undeniable, but they're only clear to the trained eye. Inflation isn't gone, it's hiding. Interest rates may have peaked, but the damage they've done to debt, growth, and consumer sentiment is still unfolding. Fiat currencies losing faith every day. Central banks around the world aren't diversifying into crypto or real estate. They're buying gold quietly, consistently, like they know something the rest of the world hasn't figured out yet. And that's the thing they do, because gold isn't a reaction, it's a response. A hedge not just against volatility, but against stupidity. Against policy missteps, against runaway debt, against the erosion of value masked as economic progress. But most won't see it, because most are looking in the wrong direction. They're chasing yields. They're addicted to momentum, They're watching stock indices float on buybacks and hype. Meanwhile, beneath the surface, gold is building a base. You see, doubling or tripling in price isn't about magic. It's about math, and gold's math is tightening. The supply side is tightening, new discoveries are fewer, grades are lower, and geopolitical risk in key mining regions is growing. Meanwhile, demand isn't slowing. It's evolving, retail investors are returning, central banks are stocking, and the most sophisticated portfolios in the world, the family offices, the sovereign funds, the ultra-high net worth clients, they're not waiting for CNBC to tell them when to move. They're reading the signs, and those signs point to accumulation. Gold at $2.00 an ounce is not expensive, not when currencies are being printed into oblivion, not when global debt is climbing toward numbers that don't make sense anymore, not when inflation, adjusted prices still lag the 1980s peak. So what happens when reality catches up? Price revalues, aggressively, not gradually, because gold doesn't give second chances. When it breaks out, it doesn't look back. The move is sudden, violent, undeniable. That's why only the smart money makes it in time, because by the time the media's talking about it, it's too late. Smart money understands this principle. Wealth is not grown in noise. It's grown in the quiet, in positioning, in preparation. That's what's happening now, not hype, not hope, but calculated moves by those who know that when the correction comes, it will come in gold's favor. So let them laugh, let them mock, let them celebrate short-term paper gains, because they've forgotten what real value looks like. Gold hasn't. It's been the same for centuries. It's outlived empires, survived collapses, endured crises. And it doesn't need to prove itself to anyone. It's waiting. And when the time is right, when currencies weaken, when debt becomes unbearable, when faith in systems begins to crack, gold won't just rise. It will reprice, double, maybe even triple, not because it wants to, but because the world will have left it no other choice. And those who are ready, they won't be surprised, they won't panic, they'll execute. Because while the rest of the market was chasing what's hot, they bought what lasts. That's the difference between smart money and loud money. Smart money doesn't talk. It moves, and right now, it's moving into gold. There are moments when the world doesn't change gradually, it breaks, suddenly, without warning, and when it does, the ones who survive aren't the fastest, the loudest, or the richest. They're the ones who were already moving before the chaos arrived. Right now, we're not just watching markets, we're watching the foundations of global finance shift. Not slowly, not subtly, but violently. You can feel it in the data, in the decisions, in the silence behind central bank smiles and well-rehearsed press statements. Because momentum doesn't wait for headlines, it doesn't wait for permission. Once it starts, it builds quietly, consistently, then it accelerates, and by the time it's visible to the masses, it's already too late. The smart ones, they saw the turn before it became a trend. Look at the charts, look at the flows, look at the way capital is moving. There's no randomness here. There's intent, purpose, quiet rotation out of risk, into resilience, out of speculation, into stores of value. This is not a shift, it's a flight. And what's driving it? Panic. Not the type that screams, the type that whispers. The kind of panic that central banks don't announce, they act on. Look at the purchases. Look at the reserves. The institutions that told you inflation was transitory are now loading up on gold, buying foreign currency, slashing rate forecasts, backpedaling on hawkish policies. Why? Because they know the game they're playing is broken. We've crossed the line. Trillions printed, debts compounded, growth faked, currency inflated. They told you it was stimulus. They told you it was necessary. But what they didn't tell you is this. You don't print your way out of a crisis. You bury yourself deeper into it. That's where we are now. The decay of fiat. A slow bleed that's now becoming a visible wound. Currencies across the world losing purchasing power. Wages chasing inflation. Nations devaluing under the weight of their own overspending. And when the money is no longer sound, people search for what is. That's the cycle. That's the moment. And that's why momentum matters now more than ever. Because the assets that are surging, They're not doing it by accident. They're not writing hype. They're writing need. Real, measurable, fundamental need, gold, silver, commodities with finite supply and infinite relevance. They're no longer just safe havens, they're escape hatches, and people are quietly stepping through them. So while the media debates soft landings, while economists argue over quarter points and bond yields, the market has already chosen, and the smart capital has already moved, because this isn't about trading anymore. It's about protection. It's about positioning. It's about acknowledging that what once worked no longer will, and what was once dismissed now becomes the backbone of preservation. Momentum is a signal. Panic is a trigger, and fiat decay is the backdrop. Together, they don't just tell a story, they write the next chapter of the global financial order. And if you're not paying attention, you'll be caught holding pieces of a system that's already breaking apart. The question is not if, the question is how fast. The smartest investors aren't chasing returns, they're escaping collapse. They're buying value, they're buying certainty, they're buying truth. Because when confidence in currency is lost, all that's left is trust in reality. And reality doesn't lie. You either move now or get moved by the market later. There is no in-between. The tide is turning, the current is shifting, the wave is building, and those still anchored to old strategies will be the first to drown. Because in times like these, you don't follow the crowd. You don't trust the narrative. You trust momentum. You read the panic, and you escape the decay, not by luck, not by chance, but by design. Voice rising, charging to a high, energy crescendo. Let me leave you with this. Silver is no longer lagging, it just started leading. And gold, it's waiting in the wings, ready to explode. That's the stage, that's the setup. And you're sitting right in the front row of history in motion.